Portfolio loans are great in many different ways, such as one loan, there's less closing costs typically. It's going to be in one entity, your LLC or corporation, your partnership, versus having multiple loans in your LLC. Makes it easier. There's one check as opposed to 4 or 5 checks, depending on how many properties you put in these portfolios.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Beau Eckstein. And on today's show, we're going to discuss how to properly structure a portfolio or a blanket loan, things to look out for. So you might have a couple properties that either you own now or you're going to be acquiring via purchase. Either way, this is going to be applicable to you. So let's just say for this example, you have 5 rental properties and you want to refinance them together in a portfolio loan or a blanket loan. So the big thing on these is to remember that you might be selling these off in the future one by one, or you might want to strategically liquidate some of these properties going forward. And if you have a blanket loan without a release clause, then you might be stuck, meaning you have to pay off the full portfolio loan.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
So if you negotiate up front for a partial release clause, and each lender has a little bit different guideline, but really what you're looking for is you're looking for a certain percentage of the total loan amount to be allocated to each property, and each property has a partial release clause, meaning property 1 has an allocation of $100,000, and maybe in the loan documents it says that if this property is to be paid off, that you have to pay off 120% of allocation, meaning if you were to sell that one property, you would have to pay off $120,000, and then that would reduce the total principal of this portfolio loan. So be sure to negotiate this up front and let the lender know what you're looking to do. Portfolio loans are great in many different ways, such as one loan, there's less closing costs typically. It's going to be in one entity, your LLC or corporation, your partnership, versus having multiple loans in your LLC. Makes it easier. There's one check as opposed to 4 or 5 checks, depending on how many properties you put in these portfolios. You can do 2 or 3, you can do 20, you can do 100 properties within one of these blanket loans. So many different options. Happy to discuss. Feel free to book a call below. Thanks as always for watching the Investor Financing Podcast. See you on the next one.